Well, let's think about the ways that this money is going to move, though, and all let's talk about the layer cake of money. Okay, so there's individuals, family offices, and tech entrepreneurs, and privately they can go buy Bitcoin, and they're the early movers. Then there's the hedge funds, like the Guggenheims of the world, and after they get their head around it, Paul Tudor Jones, Stanley Druckenmiller, Bill Miller, they can put it in their charter and they'll buy some, and I talk about 1%, 2%, 3%, and they'll start to move. But there's something that keeps them from buying 10% or 20%. The first year, they'll dip their toe in at 1 or 2%. Next year, they could amp that up by a factor of 2 or 4. So in 2021, the simplest way we grow is at some point, Bill Miller and Paul Tudor Jones and Stanley Druckenmiller say, this worked really well, but why did I buy 3 times as much gold as I bought Bitcoin? Because Bitcoin performed 200% up and gold was like up 10% or 15 or something. So when you transition from that idea that Bitcoin is a great idea to the idea that it was really stupid of me to invest in something which underperformed, you would see 2, 3, 4, 5x that money coming from those investors. Now there's another pool of money. The next pool of money is people that can buy publicly traded stocks. and the money's locked up in retirement funds like 401ks. There's a lot of investment funds that can buy public stocks, and they can buy a GBTC, they could buy MSTR, but they can't buy Bitcoin. They just can't. Okay? Lots and lots of that money. Ask, what are they looking for? Companies with Bitcoin exposure. PayPal, Square, Grayscale, MicroStrategy. There's a dynamic there, and the dynamic is, companies that have a Bitcoin strategy either on their balance sheet or on their P&L or both. Like MicroStrategy is strong on the balance sheet. Square is strong on the P&L. There'll be other companies that'll come. Coinbase will come public, right? They'll be strong on the P&L. Maybe, interesting question is, will Coinbase actually put Bitcoin on their balance sheet? Big question. Coinbase can do an IPO, raise billions of dollars, and buy Bitcoin with it. Will they? This is my plug, Brian Armstrong. I hope you do.
You're nuts if you don't.
But, you're going to see more and more of that happen. That's another part of the layer cake. Then you have companies that can do debt, companies that can invest in debt. There are 200 convertible funds and they invest in debt. That's all they can buy. They can't buy the equity, quote unquote, too risky. By the way, people that buy equity, if they ask about Bitcoin, they say, I can't buy Bitcoin, quote unquote, too risky. Okay. So at the end of the day, one layer is the hodlers with their private keys, running their own nodes. And there's a lot of people who say, that's too risky. And there's another group of people buying Bitcoin on Square Cash and on PayPal, or buying it through Coinbase, less risky. And there's another layer buying Bitcoin through institutional funds like Grayscale or the like, less risky, but still too risky for the equity people. Then there's another layer of people that will buy the tickers like Square and PayPal or MSTR or GBTC. Then there's another layer of people that will buy the debt, the convert debt. And then there's also secured debt. Maybe at some point people will start to do secured or convertible debt that is invested in Bitcoin. All of these are different buckets of money. You've got you've got insurance companies like Mass Mutual, and they've got the $230 billion in their general fund. If they decide they can start to buy an investment grade asset and anoint Bitcoin as that investment grade asset, then there's no reason that number can't go up by a factor of 100 or 1,000, right? So what we have is, I guess, about 7 layers of money. And I've met guys like, I'll meet a person that runs a hedge fund and invests in publicly traded companies. They're like, I like Bitcoin, but I'm not allowed to buy Bitcoin per my charter. I have $10 billion, but I can't buy Bitcoin. Like, to change that requires I change the minds of a committee of 24 people. It's a 24-month process. We got to go back to all of our limited partners, and we got to redo our charter, and that's going, and then that's a 3-year process. So they like Bitcoin, but they can't buy it. But if they like a public company, NICE or NASDAQ listed stock, they can buy that. And so it's not really a matter of right or wrong or orthodoxy. You just got to give them the on-ramp for the money to flow. And then I literally met people on my convertible bond roadshow, not a roadshow, but when I had my meetings, person goes, yeah, I've owned Bitcoin since 2013. I love the idea. Yeah, we're in. 20 million bucks. Okay. 60 seconds, 5 minutes. I'm going to give you $20 million.
Yeah.
Why don't you buy Bitcoin? Oh, that'll take me 3 years. Like, we can't do that.
Yeah.
You have to move a mountain to buy Bitcoin, but they can buy the debt in 30 seconds. In fact,
that's why I'm telling you, the rates are going to go negative. In a year from now, the rates are going to go negative because the oversubscription is there's going to be so much demand for it. It's going to be nuts.
We're just doing the work of providing people the on-ramps.
Yeah.
When Fidelity provides a Bitcoin fund for consumers that you can put your 401k into, then billions can flow. When they provide an institutional fund, then billions can flow. When companies come public and they offer you a stock ticker, then billions can flow. When you issue debt, then billions can flow. They're all just different ways to carve a channel from the asset ocean to the Bitcoin pond. And we're just carving that channel, and we're making it easy for people. And it'll take some time, but as people get more comfortable with Bitcoin as an investment grade treasury reserve asset, and that's the key thing, then there's $100 trillion worth of problem here. I mean, $100 trillion of assets that needs to find a safe haven home. And, people have been using sovereign debt as a safe haven.
So history has taught us when a currency fails, it fails in a spectacular way, and in a way where speed is of the total essence. If this 100,000 mark that we were talking about earlier happens in 2021, I just don't know how you're going to be able to keep the lid on it. I don't know how speed isn't going to just fear is going to just take over the market.
Look,
and you seem to think
I'm an optimist. Yeah, I'm an optimist there. So look, if you're living in the Weimar Republic and there is no alternative, you've got Weimar Marx, then you're going to have a complete collapse. But in fact, if you're living in a modern society where people have options, what's more likely to happen is as Bitcoin price goes up, money flows into it, price discovery returns to these other markets, there's a check and balance on behavior, and then people start to react to it and they start to act more rationally. So I would like to think that in a marketplace where there are rational alternatives, that Bitcoin is a stabilizing influence, and people go, oh, like for example, when a bank sees $1 billion go out the door, they say, I guess I better treat my customer better. Why is it they're leaving me? Oh, I'm not offering a Bitcoin, so I'll offer that. And then when 100 billion flows out the door, people notice. And when 1 trillion flows out the door, someone says, why is 1 trillion moving? Oh, well, because the currency is collapsing. Maybe we ought to do something about that. Maybe we should stop printing money. So, I'm going to continue to print $1 trillion a year and buy bonds because there is no inflation. Well, if the money starts to move and people start to see that that's a dynamic, maybe I'll slow down on the money printing. Right? Like in the Weimar Republic, there was no Bitcoin, right? I mean, that's why that went to zero. But there's Bitcoin here, and Bitcoin's an antidote to a problem. And so I think an optimistic view would be, as the price goes up, it becomes more appealing, and then it more people adopt it. It'll keep going up. Price discovery will return to the markets. People will start to act more rationally in the political sphere, and they'll act more rationally in the investor sphere in a constructive, peaceful fashion. That would be a good outcome.